I'm honestly kind of speechless. I mean, this stock is, like Ben said, right now it's a falling knife. But if they can get the U.S. stuff together, and if there's momentum that's breathed back into the sector, I mean, it's a hell of a buy.
Hey everyone, welcome to our latest Trade to Black podcast. Happy long weekend to all of our American friends. A lot of news happening in cannabis this week. Implosion north of the border. Canopy and Tilray down 25%. Are you concerned? Well, let's find out exactly what happened to bring in the boys. Anthony Verrill, the loan officer of the month for Silicon Valley Bank. Good to see you back. Love that t-shirt, brother.
Got to keep it light around here somehow. So it's glad to be here.
Good point. Way to keep it light in these times. Benjamin A. Smith, good to see you, sir.
Good to be here, guys. Memorial Day weekend's coming up, so investors take a much-needed break.
It's here, buddy. It's here. How's south of the border? What's going on in Florida this weekend, Anthony?
It was good. I got a fucking flat tire this morning on my bike while I was going for a ride. So then I had to have my wife come pick me up and decided to go for a ride instead.
Well,
yeah, it's
beats better than walking home 2-3 miles in 2 feet of water last month.
Oh no, I mean, yeah, it's the weather's great though. It's beautiful out. I mean, it's been monsooning all week. We thought we had a tropical storm coming, which didn't come, and now the weather's nice.
Sunny and 75 where I'm at. Ben, probably the same thing with you, right? Is it relatively around that weather?
Yeah, the weather's starting to get good. It was actually kind of cool this week. Further up north in Florida, it was in the 60s or in the high 50s, but now we're getting into the summer weather. We're talking like high 80s with humidity.
Nice.
This week.
Keep that humidity away. What on earth happened this week with Canopy and Tilray? Insane. Before we get into that, all views in the Trade to Black podcast, the guests on this podcast are purely opinion. You should not treat any opinions expressed by us or guests as investment advice, and the views on this podcast are solely intended to be informational and are not investment advice. So this is, wow, another price implosion from the top Canadian LPs. Canopy and Tilray, as I said, bad week, losing 25% each on the same week. Let's first begin with Canopy, who, they filed a voluntarily application for management cease trade order. Talking too much about psychedelics. So, Anthony, break this down for me. What exactly does this mean?
So it basically means that now they have a legally binding document that directors and officers of the company cannot sell stock into the market. It had to do with restating their financials around some stuff that had to happen with BioSteel. Maybe they just kind of wanted to figure out a way to stop the bleeding and basically tell management and tell directors, like, yeah, it's your right to sell stock, but guys, like, chill. You're damaging us kind of beyond repair. I mean, I was shocked when I saw it. I know that I've said that I was a bull on Canopy. And kind of bullish on their future growth prospects in the United States. But I mean, I don't even know what to think here. I mean, this is either just complete manipulation that they want to drive the stock down as far as they can before we take a leg up with the coming momentum in the US, or there really is just the fucking house on fire.
Yeah.
I'm throwing my hands up at this point with Tilray and Canopy and just laughing. Because it doesn't seem to be getting better. It just seems to keep getting worse.
Ben, you remember when we had Bruce Linton on? I don't know, it was a month, 2 months ago. It was the last earnings basically report for Canopy, and he was saying that how many quarters was in a row where they fell short of consensus? Was like 11 or 12 quarters in a row?
Yeah, it was something like that. It's been an absolute disaster for the company. I'm going to bring up the chart here. As you can see, this is a 6-month chart, essentially, or most of one anyway. And you can see the heavy spread in this stock. Like, we're talking, and
look
down
at that.
In the bottom right here, all the way, you can see the line which denotes $1. And that's sort of important on the NASDAQ, because if you trade below $1 for a certain period of time, I believe it's 90 trading days. I could be wrong on that, but you could actually get your stock delisted. Now, is that going to happen with Canopy? No, probably not, because they can do such measures as a reverse split and cut the share amount to get the price back up over $1. So that's probably not a concern. But psychologically, it just it hung around just above $1 for a few days, and then it just fell through. The management cease trace order was one part of it. It was also a lawsuit, multiple lawsuits from class action lawsuits that came out, and now they'll have to go through that. And it just created
Wow.
technical selling, and it imploded basically about 16% down on Thursday. So when it rains it pours in Canopy. I don't know what to say anymore. They're trading actually pretty close to the cash level, which keeps dwindling, but it's not far above their actual cash on the balance sheet right now. So I don't know. Would you buy right now? I don't buy Falling Knives, because you can
No.
see here, if you did, you're a loser the whole way. So I'm just going to wait, but hopefully they can turn around over there.
Anthony, look at that chart.
I'm honestly kind of speechless. I mean, this stock is, like Ben said, right now it's a falling knife. But if they can get the U.S. stuff together, and if there's momentum that's breathed back into the sector, I mean, it's a hell of a buy. Just to get back to where it was 6 months ago, at that $4 level. I mean, you're talking about a 5x return on your money right now. But I'm not going to touch it. The part of me hopes it kind of really sees 50, 60 cents. And then I'll start to buy at that point, to where it's either the money that I'm putting in, though, granted, I'm fully aware that it could go to zero.
I'm with Anthony, because it's actually getting interesting. Like, I didn't like it at $2, and it was like federal reform was too far away, and it was still valued, $1.5 billion and stuff like that, losing a lot of money, so it didn't make sense to me. But at about 600 million market cap, now it's getting interesting. I'm still personally not going to buy. Like I said, I don't like to buy Falling Knives. I put a lot of trust in price point and protecting my capital. That's just how I'm built.
Yeah.
But I mean, if we can get like another 20-25% down here, around 50 cents, Canopy still has a brand. They still have the acreage assets, what they have majority ownership in Wana Brands. They're going to do that roll up. They'll have a stake in TerraSend. So I don't know. I mean, at some point, I might be bottom fishing here. It's getting to that. It's getting that interesting to me.
50 cents, I'm swinging hard on that.
Are you buying based on what Ben was saying? Like, some of the perks that the company still offers? Because
I'm buying purely based on its sink or swim. If Canopy hits 50 cents and you're buying in, you're either going to get a massive return, or it really is a house on fire. You're a fucking idiot, and you probably shouldn't have bought it in the first place.
But what makes you believe
the U.S. stuff? U.S. momentum, Canopy trades as a proxy for the sector. If you see reform in the U.S., Canopy will rip. And it happens every time, because the MSOs are all on the junior exchanges that RIAs and FAs can't touch. They can touch Canopy, and Canopy does trade as a proxy to the sector. I don't think that that's a good enough argument to buy it for most people. I'd be willing to gamble at 50 cents a share on that.
I just think that song and dance is getting dated. We've been saying that for a while, but do you think history repeats itself? I don't. I think the writing's on the wall. Like, it's people have become more, I think, clever over time with. You don't think so?
I'd be willing to bet that if SAFE passed tomorrow, which it obviously is not,
you think Canopy would rip more than anything?
Canopy rips. Canopy and Tilray, the dog that we're about to talk about next, they will both rip.
They will. Yeah, I agree with that. They will, because you're talking about a significant peg of federal reform advancing, and if it does that, then you might even construe that maybe descheduling will happen to Schedule 3, right? That might be then the next extension. Who knows if they're connected at all or not? But that would, it's a significant marker that moves the ball forward. And as long as they can get into the U.S., I think they'll be fine ultimately, and that's what they need.
This industry makes more and more sense as time goes on. American reform, Canadian stocks rip. That's the reality. But to your point, yes.
They've got war chests of U.S. assets. I've said I hate Tilray as a company, but I love that they have Sweetwater distribution in the United States. If you bet on sophisticated players coming in, whether it's big pharma, big tobacco, big alcohol, I'm going to take the sophisticated distributors of CPGs in the alcohol space that can come in and create efficient, profitable cannabis businesses.
That
Constellation Constellation, Canopy, Tilray has the Sweetwater asset as
Yeah.
well as other assets, call options on other assets in the U.S. I'm purely betting on that. Their Canadian operations, I don't care. They can shut them all down tomorrow.
Yeah.
And it doesn't make a difference to me from an investment thesis.
That I'll agree with because it's more of a long-term strategy. But in the short term, if there's any kind of announcement regarding SAFE, they still rip more than existing companies that have infrastructure that are producing like, billions of dollars. That's the point I'm trying to make. But you brought up Tilray, so let's switch to Tilray. They announced a proposed registered offering of 150 million of convertible senior notes, which signals to me, Ben, more dilution. What's your take? Because that's what I got.
Oh my gosh, this has been another disaster, just like Canopy, from a price action perspective, and also from like raising money because their balance sheet isn't, keeps drawing down on the cash levels. Every periodically, they have to, do one of these convertible senior note offerings to raise money again. And I feel bad for investors because they've been doing this for years now, right?
I know.
And it just, yeah, the share count gets bloated, and it just keeps dragging down. And I believe they also have an at the market money program here, at the market buy program as well, if I'm not mistaken, which basically means that the company can offer shares and sell into the market to raise money that way. And they have a certain amount that they're allotted. So
history has
the chart
shown,
says it all
though.
here, and they're doing it again. And I think I was on Reddit Weed Stocks looking at some of the comments because it's long been a darling there, and people are just had enough of it. That was my impression.
Yeah.
They're tired of the never ending dilution, and it's almost like people are throwing in the towel, saying, "Okay, this is never going to come back." Right? So people are throwing in the towel.
You guys were talking off camera before we began about ATM. You want to explain when that's offered and what's your, I guess, the history track record as to what you see trending wise when something like that is announced and what your take is on it? Anthony, go ahead.
From my history, from my following the markets, I personally do not invest in stocks with at the market programs for a couple reasons. First of all, if the company can issue securities and sell into the market, it means that you're effectively capping any significant rally in the stock, right? And that's what you don't want to have. Like when the stock rallies, you want to get momentum and then create some upside to it. You don't want to have a potential program or a company selling their shares into any sort of significant rally that's capping the price, capping the momentum, and having things fizzle out. And it's just been from my experience with some other cannabis companies that have done this, other LPs, psychedelic stocks like MindMed. Whenever you have an ATM program and you have to raise money that way, it just a constant like wet blanket over the price action, right? And
I think
that's not what I want to see.
Yeah, I think Ben's spot on. And I mean, I think one thing that he didn't mention that I think is important to call out is these financial engineering tools that you're seeing Tilray utilize. They're also enabling short sellers. They're enabling heavy borrows against the stock. They're enabling they're enabling downward pressure on the stock. And I mean, people are fed up, and it's not a stock that I would buy, especially with all of these dilutive instruments that they're bringing to market or utilizing.
And just to add that too, there's institutions that will short. They have the catalyst table for these companies, and if they don't see any imminent catalyst on the horizon, if they see the balance sheet's still going to be in a bad shape, if they see convertible offerings in the pipeline, they have contacts and they know this kind of thing, then they'll just keep shorting into it, and you get charts that what I just brought up with Canopy. You just get heavy sleds. It's a constant drawdown on the share price. And while all investors in long term are thinking long term, this is going to be this and that in 5 years or 10 years, in the short run, you can just get destroyed on your capital if there's no catalyst to bring that up, and if there's a constant dilution into the stock, right? So
I mean, I would bet that we see Tilray go under $1 next.
Wow.
Just looking at the stock, I mean, they're sitting at a $1.1 billion market cap. It's at $1.86 after the close on Friday. I don't see any reason to justify them being more valuable than Canopy. And Canopy's greatly discounted compared to them right now. So I think they're next. I'd be shorting the shit out of it right now if I could.
When we look at this company since Irwin Simon took over, by the way, somebody who made, what was it, 15 million last year?
Yeah, I believe I read that in 2022, Irwin Simon made $15.1 million in
Yeah, and
compensation, total
I think he
compensation.
made, yeah, and I think it was over 30 the year before. So for the most part, we've seen a downturn in the stock for quite some time since he's taken over. So, um, what's I guess I already know the answer to this question, like what to make of it, because you guys have already answered. But you would short this stock big time right now if you had to, if you could.
Yeah, there's no way in hell I'm buying it. I think there's a lot of things that Irwin's done right for the company, but I mean, as far as being a fiduciary of the company, as far as being a good steward of capital, and as far as protecting his shareholders, he doesn't care about his shareholders, and it's clearly
Uh-huh.
evident. He goes on CNBC with a big smile, he says a bunch of bullshit, and then he's on his way, and then dilutes his shareholders down more. Does something like an at the money offering. I mean, but we've seen this time and time again with cannabis CEOs, especially the ones coming out of Canada with the LPs. I think there's a lot of CEOs that made far too much money and created zero value,
Yeah.
like what we saw at Aurora, what we saw at early days at Afria. One of the only guys that I would say his compensation was justified, despite the current state of the company, is Bruce. I mean, Bruce is a true pioneer for the industry. We're not here without Bruce
Hmm.
at all. Bruce and Canopy were the catalyst for building the house of cannabis.
Yeah. And I know
Bruce
that's going to
was,
be that's going to be a controversial statement, I guess, that
yeah. I don't.
people because people are going to say, "What do you mean, Bruce?" But the reality is that he made
we're
a
not
lot of
here.
people. Right, we're not here.
We're
Exactly.
not here. Bruce Linton made a lot of people a lot of money. He was the poster child for cannabis. He was on CNBC. He was at every institutional conference. He was at every conference. He sold the dream, and he did say some grandiose statements, such as "I'm building the next constellation with Canopy." There were obviously some missteps across the way, but we're not here without Bruce.
Yeah.
Having the foresight and building that massive Canadian LP that everybody followed, which it wasn't a good business model, but the showman that he was and the visionary that he was, we are not here without that man doing what he did.
And he looked like the happiest man at that Benzinga conference last month.
Yeah, he's
He
got a
had
couple $100 million in the bank, and he doesn't have to deal with any of this
I'd be
bullshit
pretty
anymore.
happy too.
he had
Yeah.
no stress. I looked at a lot of the other MSO executives. They had a lot on
Yeah.
their mind, and he was sitting there just taking it all in. But good for him to still keep his, I guess,
Yeah.
name and face in the crowd and still making himself available. But yeah, I hear you, and I'm with you, and I agree with that. Let's switch now to psychedelics, and there's some story that is starting to really it's transpired, and it's starting to get more and more attention, and it's regarding MindMed and this FCM clash. Basically, activists that are upset with the, I guess, spending from the senior executive team from MindMed. So, Ben, maybe before we go into like further, explain to me, like, for those who are not familiar as to what's going on. Like, can you outline what's going on with the company and the former chief medical officer, Dr. Scott Freeman?
Yeah, Dr. Scott Freeman, he has an interest, I believe a controlling interest in Freedom Capital Management Holdings, which is basically a group that has a holding of MindMed shares, and they're not happy with management or the board about the way they've been conducting business, specifically with the MM120 LSD trial. They put out a press release saying basically that management and the CEO, led by the CEO, has mismanaged the trial, and that it could have went that they didn't have to do certain steps. They didn't have to do a phase one when it could have went right into phase two, and basically other misdealings with the company. So they don't feel that current management has unlocked the proper value of what MindMed is actually worth, and they've been very public with their activism. Issuing press releases, doing mentioning things on their Twitter feed about how they want to replace management and the board. They've been very, very public about it.
Yeah.
And this week, MindMed sort of fired back. So every time FCM comes out with a press release, MindMed basically comes out to justify their position, saying, yeah, this is what we've done. We've gotten good data, justifying how they've come across and conducted the trial and other dealings. So it's sort of a back and forth right now. The interesting thing to me is that FCM only holds about, I believe it's less than 3% of the company shares. And usually when you have a company with such activism, they hold a bigger position.
So what's the end game here? What's the end game here then?
The end game is, I don't know. Basically,
Yeah.
FCM is trying to, get consensus and support for the management and board to be changed. And MindMed comes, is justifying their position and saying that, they've been doing everything pretty well and that they're progressing. So I don't know how it's going to turn out. Again, because they don't own a very robust amount of shares, right? So I don't know how much support they're going to generate for their ideas, but they've been very public about it. And I'm just, eating the popcorn, waiting to see what happens. I really don't know.
160 million in cash, but a burn rate close to $20 million per quarter for this company, Anthony. And this was a darling in the space, as we've said in previous podcasts, but have times changed?
Yeah, I mean, I tend to agree with FCM here, but I also think that Ben is a very valid point that if you're going to be an activist, you have to put your money where your mouth is.
Yeah.
And a 3% stake is not anything that really warrants conversation or merit, to be honest. But I mean, I might get some flack for this, but I mean, I've always thought that MindMed is really in the same class as Field Trip this sector. Yeah. I mean, I think when it comes to the drug development aspect of it, I think when it comes to the way the company's been ran, I think the management team is analogous to what we saw at Field Trip. I don't think it's been managed correctly. I mean, when they came out, I saw a lot of stock promotion, a lot of aggressive moves in the stock that were unjustified. It looked like a self-enrichment vehicle for the founders and the shell guys that brought it public. So, I mean, MindMed has really always been, as far as I'm concerned, a promo deal in the psychedelic space. It does have merit. They are doing trials. They do have a core business, but I think MindMed is Mickey Mouse compared to what you see at Atai, Cybin, and the bigger boys in the space.
Now, it's worth noting too, and one point that I do agree with FCM on is the shareholder capital at the top. Management of MindMed holds a very, very low percentage of shares in the company, which is problematic because then if you don't have skin on the game, right?
Yeah.
You don't have skin in the game if you don't hold a big share tranche in the company, right? It's like, why does it matter if what happens? Because your holdings aren't really going to be reflective of the performance that you're trying to give. So I think that management at the top, I always want to see a higher holding, insider shareholding, maybe with CEO or upper management, maybe 2-3%. But it's well below, like it's at like the 0.01% range or lower, from my understanding, and that is a problem, I think.
Yeah, it's completely unacceptable.
Well, let's touch on the big performer of the week, company that continues to, I think, grab our attention. And full disclosure, they are a client of ours here at the Dales Report, is Numinus Wellness. They jumped 19.35% on Friday, its best daily volume this year alone. We hosted a Twitter space earlier this week, which really resonated. There were some great sound bites from Peyton, but some really good questions about, their partnership with MAPS, sort of the advantage or exclusivity they could have currently now, maybe moving forward into the future. But most importantly, if FDA is going to approve MDMA, and kind of the vibe I got, it's a foregone conclusion. It's just a matter of how that rollout is going to take place and what it looks like. But needless to say, Ben, good day or a good week for Numinus based on being up close to 20%.
Yeah, absolutely. I mean, we hosted that Twitter Spaces, and it something resonated, I think, because I mean, the next day we're up 19%. It had the best volume of the year. That's the most important thing, right? It traded over
this is the
1.2.
bottom. You think this is the bottom? Sorry, I cut you off there, but do you think this is the bottom?
I don't know. It's really hard to say. All I can say is that from a volume perspective, from a technical perspective, that's exactly what you want to see at the bottom. You want to see robust like activity on the shares traded side, and that's what they had. Over 1.2 million shares traded, which was the most year to date, really going back into last fall. So this was, technically speaking, I think this was an important day. Can it sustain the momentum? Possibly. I mean, we have the MAPS conference going on in June next month, June 19th to 22nd, and that's going to be important for Numinous because from our understanding, there's going to be a lot of clinicians there. And, if the MDMA gets approval, Peyton mentioned that the MAP studies coming out for MAP 2, within 30, 60 days, and that would be big for them. FDA approval possibly next year. So there's a lot of good catalysts, and maybe people are jumping in right here, but the volume profile looks pretty good.
Flight and hotel booked for that conference to Denver next month. Wonder if there's any cannabis dispensaries that we should check out in Colorado. Anthony, you probably no.
It's all the same shit.
Is it?
To be honest, I mean, Denver, Colorado, they've got some cool dispensaries. None of them are in Denver. The coolest dispensaries I've been to in Colorado are outside in Breckenridge, on the way to Breckenridge, Aspen. There's some stuff.
How far is Aspen from Denver?
4 or 5 hours drive.
It's
if you're lucky. Usually you fly to Denver and then take a small plane to Aspen.
Yeah.
My favorite dispensary closed down. They got caught diverting cash off of their books in downtown Denver, which it was a great spot. They had a bunch of really cool products. But yeah, there's a ton of stuff, obviously, to see in Denver, cannabis-wise.
Hot real estate market since COVID. Let's switch now to technology. And if you've been hiding under a rock, all you missed this week was a huge week for the semiconductor space, led by none other than NVIDIA, who beat EPS along with guidance raise that we talked about in our last episode. Peers like AMD, Taiwan Semiconductor, Marvell Technology spiked again on Friday, massive runs. So, Anthony, question, would you say this whole tech rally is broadening now?
Yeah, I mean, it is after Friday, and it's good to see, because if it was all at the top and it was the mega cap tech that were just zooming, meanwhile, I think the greater market was up around 4%. No, the S&P is actually up 4% year to date versus the tech stocks that you've got NVIDIA and Meta that are up over 100% on the year. You've got Microsoft and Google that I think are up anywhere between 30 and 50% respectively on the year. Mega cap tech is zooming. And yeah, I mean, there's going to need to be other chip manufacturers that come into the AI fray, which are Marvell, Taiwan Semi, AMD. So yeah, you're starting to see it broaden out. And I mean, I was a participant. I bought Taiwan Semi on Friday, and I'll continue to probably look at to see where there's more value coming moving forward.
Up 100% Meta on the year. Wow.
Yeah, I bought Meta at 96 a share. My average cost was like between 96 and 100. That I'm still sitting on.
Yeah, you called that on the broadcast at the time when everybody was bearish on it, and good call there. I mean, that it's been an amazing run, and that was my biggest takeaway this week too. That basically, like, this is no longer a bear market rally. I mean, it was sort of debate on whether, you had a couple sectors that were hot and that maybe this was just a strong bear market rally and the overall trend is still down. But to me, this is looking more like just like a bull run in technology and just in some sectors here. Like it has broadened out way beyond chips and Marvell and the ones you mentioned. We're talking about Netflix had a strong day. Microsoft was up 6%. Tesla was up 6%. Like it went well beyond semiconductors and into the broad technology stocks. And this is looking like the Nasdaq's over 14,000 now, right? Like it is not.
It's crazy. The market
Yeah. It was this week. Like in COVID, it was in the 9,000s or 7,000s even. Now,
it was dropped. Yeah.
Well, there was a surprise this week at a report that consumer spending actually is a lot higher than what people are anticipating right now for the year. But the scary, I don't want to say scary thing, but one of the things that looming is based off of that, could we see a rate hike in the next week or two?
I think you're going to see another rate hike. I think you're going to see another 25 basis point hike. And then the main thing is, does the debt ceiling get resolved next week? If the debt ceiling does not get resolved next week, the market is going to fucking crater and come back down to earth, which Biden needs to realize that is not going to look good for him.
Explain to our viewers just why, if that's not resolved, the market will crater.
Because the U.S. is potentially going to get a downgrade in its credit rating. The U.S., if it doesn't get resolved, the U.S. is going to start defaulting on the liabilities that it has to pay on a monthly basis, and then a lot of things start to break around here. It's not good for the general health of the markets.
Do you think it gets resolved?
Yeah. I mean,
Yeah.
there was a handshake deal. I think on Thursday that was announced where they're going to put a moratorium on spending for the next couple of years. They need to figure out how to cut certain ways. But the problem is the only way to get out of this thing is really raising taxes. And no one on either side of the aisle wants to raise taxes. Cutting entitlements and raising taxes are how we get out of this, or how we actually get the spending under control, which cutting entitlements with all the boomers in this country, if you're a presidential candidate or if you're a politician and you even mutter those words, you're going to get tomatoes thrown at you and you're basically just good as dead. And then obviously raising taxes on the wealthy, which Biden wants to do with everybody over 400K a year, is something that he's floating around.
Yeah, it's it'll get resolved. It always does. You have this brinkmanship every single year, and every single year it gets resolved. It's just a matter of,
Yep.
and what they should be doing is really taking a huge, like slashing entitlement spending, slashing military industrial complex spending. There's a lot of things that they could actually do, but there's no political will to actually do that because all the politicians and the the corporate lobbies are it's a gravy train for them. So unfortunately they're not making the cuts that are really needed, and they're going to the old fallback with taxes. So we'll see how that turns out. I think that they want to reduce spending by like 0.2%. That's their big concession. And of GDP, and that's just unacceptable, right? Like the debt levels are getting to the point where, how much are we paying, Anthony, on the debt interest on that, like $3 trillion a year? I mean, it's insane.
Yeah, something like that. Something like that. The numbers now are so big that it just doesn't even
matter.
It doesn't make sense.
It does, but it doesn't.
Yeah.
Gents, these shows are getting better and better each week. Leave a comment below. What do you like? Do you like what we talk about? Cannabis, psychedelics, anything else you want us to cover? Any questions? Let us know what they are when we will dive into them and get the response that you want. Happy long weekend, Anthony. Ben, enjoy the rest of your weekend, and we'll catch back in early next week.
Thanks, guys.
Talk soon, guys.
Hey, everyone. Thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel because we would not be here without you. Thanks for watching, everyone.